please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Business Lunch. I'm Nisha Podar and with me is my co-anchor Manglam Malu. Manglam, good afternoon. It's a good day of trade. Of course, it's going to be a shortish week, but the markets are really looking euphoric. Nifty, Sensex, both of them up almost 0.7% in trades today. Mid-caps also in line with the frontline indices have been roaring up. But what's really outperforming is the banking sector, and this is largely contributed by the private banks, while the PSU banks are clearly a drag, with SBI, PNB and some of the other PSU banks really dragging the overall market down.
That's right. The PSU banks are not doing well, but the PSU bank has little representation on the Nifty bank, which is why we're seeing that outperformance come by from the private banks and the Nifty bank itself. Nisha, 0.75% gain on the frontline indices, but just take a look at the broader markets. Two stocks in the green for one in the red, and as we speak, a lot of these stocks are moving, particularly from the pharmaceutical space. Ajanta Pharma, that one's at the high point of the day. Dr. Reddy's opened in the red and now has recovered about 4% from the low point of the day and currently trading in the green. Remember, they had that EIR come in for the Srikakulam facility. Raymond is spiking, and a lot of these FNO stocks, the likes of Shrey Infra and Balrampur Chini too, at the high point of the day. But not to be forgotten, the global markets, they were pretty strong as we in the morning. In fact, the Asian markets, they were higher after the Wall Street rally at about 350 points coming in on the Dow. The markets await Federal Reserve Chair Jerome Powell's testimony before the Congress for clues on the central bank's interest rate hike path. But if you take a look at the European markets, they are set to open on a strong footing ahead of heavy inflation-related data events this week. Investors also keeping an eye on further earnings coming in the European markets.
All right, European markets expected to really open strong. Indian markets looking strong as far as the advanced decline is concerned. But on to a big money control exclusive then. Some news developments there that the government is readying a tough law for speedier recovery of dues coming in from Nirav Modi-type fugitives. And sources tell us that the government is fast-tracking a draft law that will allow non-conviction-based seizure and sale of absconding defaulters' assets through a special court. So the tough measures that are in the making, and our colleague Gaurav Chaudhary of Money Control News is here with all the exclusive details. Gaurav, tell us, what are your sources telling you and how tough are these measures, and by when can we see these really on the ground being effective in such fraud cases?
See, there's a couple of things. The bill is going to be called the Fugitive Economic Offenders Bill. And if you remember, the bill was first proposed or mentioned in the budget speech for 2017. That was in on February 1, 2017, last year. So the first draft, the finance minister put out the first draft sometime in the month of May, and then it went to Law Ministry for legal vetting. The Law Ministry approved the draft with some and recommended a few changes in the month of September. After that, there has been no action on that. In the meantime, this PNB scam involving Nirav Modi, involving a sum of 11,400 crore breaks out. Now, the government has now decided to fast-track it. Fast-track it in the sense that it's going to introduce the bill anytime after March 6th, next week, when Parliament reconvenes for the second part of the budget session. What the bill does is that it allows non-conviction-based seizure and sale of absconding defaulters' assets and property through a special court. This is different from the existing laws and provisions, which even under the Prevention of Money Laundering Act, the Enforcement Directorate has the powers to attach properties and eventually sell it. But then they have to go through a process of courts and a string of procedures. That is what this bill will seek to do, is to bypass all of those, the multiple layers of judicial scrutiny, judicial rules and laws, as well as administrative procedures, which will allow an agency like an ED to first seize the properties, impound them, and then sell it off without any encumbrances. So they don't have to wait for the conviction of the absconder to sell off his assets and recover the dues.
All right, Gaurav, thanks a lot for joining in and giving us those details. In fact, I'd just like to remind our viewers that this was slated to be taken up in the winter session of the Parliament, but the government unfortunately couldn't table it or did not table it in this session, but we'll keep an eye out on developments there. Talking about keeping an eye out, watch out for the markets. The Nifty Bank is at the high point of the day. However, market expert Kaku Nahate says that Indian markets are likely to correct by 8 to 10% more from current levels. Here's an exclusive excerpt of our chat with Nisha Poddar.
India is no longer delinked with the global markets. So the global markets itself are volatile, and you've seen, markets fall across the globe, and India cannot be an exception. However good you do, flows and redemptions, follow the global sentiment. So that's one. On the Indian markets in particular, if I may say, Nisha, is the story over? There could be some downside. But I think people are also ignoring, and actually our strategist Sanjay Mukim just came out with a piece few days back on the third piece on transformation of India. And there I would really like to highlight 2 or 3 points. One is that demonetization and GST impact on the worst end has already gone through. The upside is now going to come. Of course, rains have to be important. And bank recapitalization overall for the steadiness of the market is a must in my opinion. So the market from here, I don't see a downside more than 8 to 9% at max. And I think once we get around this initial, worry, for good companies, even I'm seeing buy orders on our desk even now, as what my equity guys tell me.
Right. What do you think about the NBFC sector in particular now, and also the entire financial services basket minus the banks? Now that the banks are going through a crisis, do you think that it is given a kind of a floor to the fall in the overall financial services basket minus banks, because they had run up most experts expected them to fall the most, but have they got a floor at the expense because of the kind of scenario that the banks are seeing right now?
So 2 or 3 things. I think private banks have fallen more than what they really need to. It's not just the PNB announcement, but it is also how the provisioning is going to be done in the next 180 days, and the clarification or the recognition around that. Analysts have actually talked down the stocks much more. I personally feel that the private sector banks, the leading ones, definitely look good at this level. Coming to the NBFCs, again, one of the things in transformation of India that we have talked about is about the affordable housing. And these stocks, as you know, have run up quite a lot. But our analysis shows that with the way we are focusing and the next growth story of India besides consumption.
Nifty Bank at the high point of the day, led higher by ICICI Bank. That one should come up for you. That one too is trading at the high point of the day. From the mid-cap arena of things, we have PC Jeweler. That one should come up for you. In fact, opened up in the green around that 340 mark, and then dipped to as low as 315, 316, and now we have that sharp spike on PC Jeweler, so we'll keep an eye out on a couple of these movers. But the 4-day Kotak Institutional Equities Chasing Growth Conference is underway in Mumbai. From the sidelines of the conference, we spoke to Rajneesh Kumar, the chairman of State Bank of India, on the PNB fraud case and the company's earnings outlook. Take a look.
When we talk about the quarterly performance, one big element which we will have to be mindful of, the increase in the yield where mark-to-market provisions will hit most of the banks, and how much that will be, that is still not known. But that is one factor more than the provision which will impact the performance of all the banks, not SBI alone, but we have the largest treasury. As far as our exposure is concerned on Punjab National Bank, so that number is very much confirmed, calculated and advised to the Punjab National Bank, and our exposure on one of the companies, Gitanjali Gems, that also has been crystallized, and there was no issue around that.
All right, so that was a word coming in from State Bank of India. Now remember that the entire banking system is involved in the NCLT processes, and NPA recovery is going to be the big theme of the deal street this year. Now talking about that, there is a foreign investor, Sanjeev Gupta, who is the executive chairman of Liberty House, who spoke exclusively to CNBC today, and he highlighted on the other key Indian assets that he has bid for, or his firm has bid for, apart from Bhushan Power.
We had to choose. We cannot bid for everything. So we had to choose. We want to enter specific sectors. We want to enter the primary steel sector, so we chose Bhushan Power. We want to enter recycling of steel, so we are going to bid for ABG to break ships there and recycle them. We wanted to be in the auto sector, so we bid for Amtech. In principle, strategically, it is a great fit for us. We have already bought the Amtech auto businesses in the UK from the UK RP equivalent, and those businesses are already integrated with our business and are already very successfully turned around. Similarly, in India, we're very confident that if we win Amtech auto, we will be able to integrate that with our business, which is the largest in the UK now in the sector, and we'll be able to make it a great success. So that is the reason and the basis on which we are bidding for these assets. We believe we will be a good strategic fit, and hence we will be able to make propositions which are superior to others.
All right, let's move on to the primary market action then. Warburg Pincus-led Lemon Tree Hotels will be hitting D Street soon with its 1,000 to 1,200 crore rupee IPO. Speaking to CNBC TV 18's Priya Shed, Patanjali Keswani, the chairman and MD of Lemon Tree Hotels, says that the issue is largely an offer for sale, which will see partial exit coming in from long-term shareholders. Here's a slice of that conversation.
Well, Warburg has been invested with us since 2006, so their fund life is over. So they will be exiting a part of their stake. So I expect them to sell about 12% of the issue, which is, as I said, 20 to 22%. And some friends of mine who invested with the company way back in 2005 and 2006, after I had started it, they will also be exiting a part of their stake. So in total, as I said, half of the stake sale, the offer for sale, will be by Warburg and the other half by friends.
Since this is an offer for sale, we wanted to understand with regards to the investment in growing the property and expanding it further, what would be the amount of money that you would be deploying in the business over the next 2 to 3 years?
Well, right now, we have fully invested. See, we are going to add about a little under 3,000 rooms in the next 3.5 years in the company, of which about 2,000 rooms, about 1,500 rooms are owned by us and 1,500 are rooms that we will manage. So the funding required for these 1,500 rooms is about 2,000 crores. And as I said, we are fully funded as far as equity goes. We'll be borrowing for the balance. And when all this gets done, we'll be a little under 8,000 rooms in India. And for that, we don't need any additional capital, which is why this is a complete secondary sale and offer for sale.
About 412 odd crore was the kind of revenue that you clocked in the last financial year. In terms of the CAGR that we've seen over the last couple of years, I understand it's somewhere around 17, upwards of 17%. Yes. Do you see this kind of revenue run rate something that's sustainable? Do you think it could grow beyond this with the kind of expansion that you're planning? Well,
Priya, broadly, our revenue growth in the last 5 years has been at about 18% and has been driven fundamentally not by price increase, but by more rooms sold, because we kept adding rooms. Going forward, I expect it will be driven by a combination of the two, which is the new rooms we add and the improvement in rates that we achieve, whatever they are. So I see this CAGR, which you are referring to, as only improving, not reducing.
All right, and some flashes on our screens, in fact, sometime back from the news agency NewsRise. It was talking about Finance Ministry making some comments about not extending any additional support to PNB regarding the Nirav Modi scam case. And in fact, Punjab National Bank is likely to strike several deals by selling their non-core assets and recover the 11,300 odd crore rupees. So that's the really Finance Minister officials saying that there could be some transactions at PNB. Take a look at PNB stock, and that particular counter has recovered a slight bit, and of course off the day's low for the trading session today. And in fact, PNB Housing Finance, that is one counter also on my radar, because that has been in positive zone today. And if you look at the 7-day chart for that particular counter, it has been on an upward move while PNB has been going down. So therefore, definitely it's one of those assets that PNB could be really relying on for gaining some cash as well. So keep an eye out on these counters. But let's, all right, we'll
try to get Ashmit on that. In fact, you spoke about PNB Housing Finance as well as PNB. So PNB Housing Finance, the stake that Punjab National Bank has in PNB Housing Finance is worth close to around 6,710 rupees. That compares with Punjab National Bank's own stake of close to 27,500 crore rupees. So remember, over the last 15-16 trading sessions, Punjab National Bank has lost in excess of 15,000 crores in terms of its market cap. We'll keep an eye out on this. But we are getting some more news flashes coming. This is with regard to the Daiichi Fortis case. Delhi High Court attaches all assets of RHC Holdings. We have Ashmit with us. Ashmit, what are you gathering? The first line that we have is that the Delhi High Court has attached all assets of RHC Holdings. What could it be worth, and what does this imply as far as the case is concerned?
Well, as far as today's order is concerned, yes, you rightly pointed out, but it's not just RSC Holdings, but also Oscar Investments. These two companies are essentially the vehicles, are essentially the holding companies through which Singh brothers enjoy shareholding in various of their subsidiaries. Now, what's important is that both these companies had submitted their list of assets in the month of March of 2017. And as per that list, the Delhi High Court has attached all of those assets. Now, as per the Singh brothers' arguments here in the Delhi High Court, these assets add up to about 3,200 crore rupees, and their assessment is that there should be a valuation done and that this list should be able to meet the demand that has been made by Daiichi for 3,500 crore rupees. So in pursuance of that, now we have the Delhi High Court passing very clear orders that all the assets stated in that affidavit by both RSC Holdings as well as Oscar Investments, they have now been attached and now will be liquidated and will be valued. What's also important is that while having done this, the Delhi High Court has also sought a list of unencumbered assets of Singh brothers' personal assets. So this is something that is important, where the Delhi High Court is moving beyond just the dues that are payable by RSC Holdings and Oscar, but also now looking at personal assets. Also, there are very, very clear directions that up until further orders from the High Court, both these holding companies, that's RSC Holdings and Oscar Investments, will not be allowed to work their bank accounts, will not be allowed to operate their bank accounts, except only for two exceptions: one, for payment of salaries, and two, payment for statutory dues. The other takeaway here also is that as far as the other assets are concerned, Delhi High Court has continued its earlier order of a status quo, that the status quo has to be maintained, and that there can be no sale or creation of third-party rights with respect to any of the assets, and that the hearing will resume after 2 weeks' time on March of 23rd. So giving the Singh brothers essentially 2 weeks to submit a list of unencumbered personal assets, and up until then, importantly, all assets of RHC as well as Oscar Investments, as stated by them, is now under attachment after today's Delhi High Court order.
So Ashmit, very quickly in one line, any visibility on where does it leave the deal of Fortis, of the sale of Fortis, with the promoters having quit the board and the lenders having invoked the pledged shares? Now they pretty much have about only 3%. Where does it leave the deal? Any legal understanding on that bit after this news?
Well, for one, it might be a little premature to perhaps join the dots, but yes, as you correctly pointed out, their shareholding is down. That is on account of various bankers invoking their pledge shares, which has been a concern there. What raises the questions now to be raised are that what is the kind of and the quality of shareholding that Singh brothers currently enjoy, that quality of shareholding in terms of whether or not there are encumbrances upon those shareholding is perhaps something that will dictate whether or not the deal goes forward, whether or not there can be any negotiations or conversation on that. So that is something perhaps that Singh brothers as well as RHC and Oscar Investments will have to clarify on the quality of their holdings and whether or not there are any encumbrances.
and what's really strengthening its position in the trade today is clearly Nifty Bank, and that strength is really being aided by ICICI Bank, which is roaring ahead in trades and at the high point of the day. But one stock on my radar is Ansal Properties. It has seen a sudden fall in the trading session today and is down over 2% as we speak. So that's one counter to really watch out for. Apart from that, of course, Fortis on the back of news has also come down, and we still have to get some more clarity on how this really impacts the overall deal scenario for Fortis as far as the new twist in the legal battle is concerned with Daiichi and also Religare, which is a group company. So that's that of the markets, Mangala.
That's right. So we'll keep an eye out on that. But with this, we have completely run out of time on Business Lunch. Stay tuned to CNBC TV 18.